is that when a 30-minute or the 1 hour candle is closing bearish while you're in buys, there's a very high chance the next candle can continue moving down, right? So we're going to wait. So we're going to wait to see what happens now with the next candle. Okay, the next candle comes back down. The next candle tries to break the high and then it comes back down. So now people who are a little bit advanced here, someone will say, okay, fake out. Someone says fake out here. This is an excellent case of a fake out. A fake out, for someone who doesn't know, is basically, now let me just explain this here. Price will only move up continuously, or it will only move down continuously, right? Or it will consolidate. When price is consolidating, and if it tries to move up, and if it comes down to retest to continue move up, if it can't move up, it will go back in the range, right? It will come back in the range, it will try to consolidate, and almost all the time it will break the opposite way. The reason why is because, like price ranged here, let's say on the 30-minute time frame, and price broke up to continue up, but it couldn't break up. It came back in the range. If price couldn't break up, where else will it break to? There's a very high chance it may try to break down, because price always move up or it moves down. Imagine if price moved sideways, and diagonally and up and down and top to bottom, and it moved in all these directions, man, no one would be able to make money. We're all going to be fucked because we wouldn't be able to make any money here, man, because price is moving 30 degrees to the northeast. Like, man, what the hell is that? I only want to know if price is going to move up or it's going to move down. That's it. That's all we want to know, right? So price did a fake out. It tried to move up. It couldn't move back up. So obviously there's going to be a higher chance for price to move down. So let me just draw this support back here again, right over here, right? And let's look at the next candle. Next candle breaks down right over here, right? So now by answering only 2 words or just 1 word, what's the probability that price will move down? It's a very high probability price will move down, right? So obviously, sometimes we don't really get a entry over here, but we just kind of estimate the price is going to go down, and we look at the next one, price starts to move down, and price starts to move down even higher now, right? So now we have to look at this and say that, okay, since we missed this move, right? Since we missed this move, what would have been the perfect entry for this trade? And if we go back now, I think once price broke the high over here, right? Broke the high over here. Some people took buys, took up. Price formed a bearish candle. So when 30-minute candle closed bearish, at this point, we basically closed the trade. We're like, okay, you know what? We're going to wait for price to break the high. And then this candle formed this wick, kind of wicked above the candle. And I'm going to assume that it wicked above the previous candle in the first 5 or 10 minutes, right? That's what I'm going to assume. Then the first 5-10 minutes it wicked above, and we're like, okay, you know what, it's too early to break the high, so we're just going to wait for the second half of the candle, right? And when this candle closed back in the range, it basically made a high right over here, right? And it closed back in the range. So now we're like, okay, it made a high and it closed back in the range. Maybe if we wait for the next candle to kind of do a retest of this resistance, because basically what you have over here is all right, let me just bring my arrow back here. So you have resistance, 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 resistance. You have candle with no wick, resistance, breakout, and this candle closing back under resistance. So if you look at the next candle kind of did a retest of this resistance, and then it started to go down, right? So here's the idea now. Now, if you're looking at this setup, right, and if you're only looking at this information here, I'm assuming that you're already looking at this move up as a fake out. And we have some experienced traders here in this meeting here. You're already looking to say this as, okay, you know what, it will now continue moving down. Someone is asking, it's almost like a bear flag forming with consolidation. Listen, this is why I put the chat off, because, you got things like these. Like, the only thing I'm talking about here is the only thing I'm not talking about your bear flags or pennants or Fibonacci's. Or, man, how long have you been trading flags and pennants and you've been losing? For how long? How long has it been happening? This is something very simple, concise. No, I mean, man, listen, you need to leave the meeting right now. Whoever's talking about these pennants and flags, you can stop. So, okay. So now, if you're an experienced trader, you're looking at the candle forming like this, you're already making up your mind that, okay, price will now start moving down. Actually, you know what I'm going to do? I'm going to close the chat here. Perfect. I don't get distracted. The gulag. All right. So you've already made up your mind that price will break support. Now, this example is an advanced example, so that's why I'm talking like that, right? So basically, when next candle forms, a bearish candle, you're basically anticipating this candle to respect the high of the previous candle, right? So this is going to be an impulse entry. As this candle is moving up, you're saying, okay, you know what? Since it's a fake out, there's a higher chance for price to break support and continue down. I may be okay by taking a sell right over here and having the stop loss above the previous candle, anticipating it to continue moving down. It breaks the support, you're already in the trade, and now you can continue to trade moving further down. So that's how fake out works. So fake out, you're anticipating moves happening. Whenever you're looking at the candles, in your mind, you're already printing the candles the way you want them to move. But at the same time, you already understand what your loss is going to be, what you're putting at risk, right? So this was a little bit of an advanced concept here. So let's go off to the next example here now. Let's take a look at the next example. All right. So we have candles kind of like forming like this, right? So from the get-go, what we see is that we see clean move happening here, right? We had a clean candle moving up. So when you have clean candles moving up, there's a very high chance that the next candle will continue moving down. We all can agree to that the next candle will continue to move down. And if we have let's say, we have a resistance forming right over here now, right? And we have a major support down over here. Right, so now this is an enough range for price to come back down. So I'm going to open up the chat here again because I think this was fun. Now, what's the probability of price going up, back up? What's the probability of price going back up? It's very low, right? It's very low. It's not zero, but it's very low. The probability of price moving down is extremely high from what we see right over here. And if we see price is going to move down, that means price is going to move in a downtrend, right? So if price is going to move in a downtrend, what do we want candles to do? We want candles to make lower lows and lower highs. So for someone who's watched price making lower lows and lower highs, they might look at this and say, okay, you know what? Maybe I want to enter a position and keeping my stop above the previous candle, anticipating the next candles to continue making lower highs and lower lows, only because we have enough range to go down and we have all this clean traffic that went up. So then there's a high chance price will, mirror this move and come down. That's it. That's all what we're looking at. So let's see what happens with the next candle here. Next candle, forms like this, right? Next candle forms like this. So now what you have here is that you have an entry which is right over here, right? Okay, so this example now turned very interesting now, right? You have a candle closing bullish. So now basically you have an entry down over here on this candle and your stop is right up over here, right? So now at this point, someone said that we will close 50% of the position. So now since you're already in a trade and the 30-minute candle is closing bullish like this. Now, since what you've learned is that, okay, well, if the 30-minute candle is closing bullish, there's a very high chance the next candle can also continue going bullish, right? But you're already in a trade. You've already made up your mind that price will continue moving down. So when when you're faced with a situation like this, instead of keeping the entire position open and keeping your entire risk open, it's a really good idea to reduce the risk, right? Because now candles close bullish. You know that if the 30-minute or the 1 hour candle closing bullish, there's a very high chance for the next candle to go up. So you want to reduce risk. That's how you ultimately reduce your losses. You keep your losses small. Is that now you're keeping risk away. Maybe let's say if you had a 1 lot open, you might want to close 0.5 lot. Now if price hits your stop loss, you're not going to lose, let's say your original loss was $100. If price hits the stop loss, you're not going to lose $100. Maybe you're going to lose $50, right? So now let's see now at the same time, if you're in a sell, you're also saying that, okay, if we're in a sell, how do I want to add another position if price starts to break the low? If the next candle starts breaking the low of this bullish candle, then at that time you can say that, okay, maybe at this point we can add an impulse entry to the trade. Makes sense? If we have the next candle kind of like breaking the low, at this point you can add an impulse entry saying that, okay, well, all of our confirmations here to the left, they make sense and we may continue to move down. So let's see what the next candle does here. Next one starts to go bearish, and that's where you enter an impulse entry. That's where impulse entries are really important, because you're adding impulse entries with confirmations that the lows are now getting broken. At the same time, if you look at this fact here, that we had a big bearish candle, we had a smaller bearish candle, but when this bullish candle closed, it closed with a small body. So that's why once this candle broke, you added a second entry, impulse entry, and now you have a trade running which may end up heading down. Makes sense? So yeah, and it started to move down here, came down to support, and then start to move up. Okay, perfect. So if we go back here, let's just rewind this example here a little bit, right? So if we go back here, okay, so you had this candle forming bearish, right? This candle forming bearish, and you looked at that and said, okay, you know what? There's a very high chance for the next candle to go down, so I'm going to take a sell. So you took a sell right over here. Your stop was right up over here. The next candle forms like a small bullish candle, and you're still in a trade. You've reduced your loss over here, and now you're thinking that, okay, because you're always thinking, what are you going to do when the next candle forms? What are you going to do, right? So at this stage, what you're thinking that, okay, I've closed 50%. If the next candle starts to go up, I can now I'm going to lose less what I anticipated to lose, right? At the same time, you're thinking, if the next candle starts breaking the low over here, maybe I can add another position. That's what you're thinking. Now I can add another one. So price breaks the low, you add another position, and now it starts to go down. So now when the next candle forms, maybe you can add a third one too, because now when you can add a third one, you can maybe add a third one maybe right over here or at the retracement of the next candle, and keep the stop right above over here. So now you bring your stops down as well. You're trailing your stop losses because your target is right down here to the left hand side, and next candle kind of like wicks up and continues to go down, right? So you're really looking at where the candles are forming, how the candles are breaking the lows, and all that stuff. We're not looking at any morning stars or star trek, star patterns, nothing. We're just looking at simple candles as they're breaking the lows, as they're breaking the highs, and that's it. Very simple stuff by reading candles. Man, if you can't read candles, you can't trade. That's just what it is, man. Like if you look at the chart all zoomed out and you have your EMAs planned and fibs planned and they're not working, you're applying more indicators, man, rocket science. Can't do that. All right, let's take a look at the next example here. Okay, price then continued to move down. Oh, okay. Let's talk about candles with no wicks, right? Let's just talk about that because I get a lot of questions. So since we're looking at the candles, we'll talk about the candles with no wicks here too. All right. So basically, when you have a candle with, let's say, no wick at the bottom, okay, or leave that. Let's say we have this candle here and it has a wick at the bottom, right? It has a wick at the bottom. So whenever a candle has a wick at the bottom, you're mostly saying that, okay, since the candle has a wick at the bottom, this means that the next candle has the ability to now come down to fill this wick, right? So like, okay, perfect. Next candle can come down to fill this wick because the candle has now left a range for the next candle to fill. But if a candle has no wick at the bottom, just like right over here, this means there's no range for the next candle to go down. There's no range at all. So like wicks are basically breadcrumbs the candle is leaving for the next candle to follow. Right? So if a candle has no wick at the bottom, this means there's no range, then there's a higher probability that the next candle will go the opposite way. There's a 50-50 chance, Like if you look right over here, this candle had no wick at the bottom and the next candle still went down, right? But if you look right over here, this candle, this candle had no wick at the bottom, and I mean, like this candle had no wick at the bottom, and next candle kind of like went down, even though this was a big volume candle coming down. But once you have a candle that kind of like forms like this with no wick at the top, this means this candle couldn't even move up a little bit. It couldn't even move up a little bit. It just moved straight down, which means there's higher bearish momentum. Same thing right over here. This big bullish candle, it didn't even move down, not even a tiny bit. It just moved straight up, like straight bullish momentum. So, something about like, candles with no wicks. You can just look at the charts and do some back testing. All right, let's go to the next example here. And ta-da. Oh, okay, let's go to the next one. All right, this is what's happening right over here. We have a support formed. We kind of have like a resistance form right over here, and we have some sort of an issue maybe over here somewhere, some sort of a weird issue happening here, and it's just, there's basically, if price is going to go up, there's not enough range to go up, right? So we're probably going to have to wait for this area to break over here. So let's see what happens here now. Okay, so next candle goes up, goes bullish, next candle kind of comes down. So at this stage, it seems like we're creating what? A range. We're creating like a consolidation because like this candle went bullish, it went at resistance. We can't buy because we're under resistance. We can't sell because candle is bullish. Next candle closed bearish. We can't sell because now it's maybe respecting this minor support over here. We can't buy because candle is bearish, right? Now we wait for the next candle. Wait for next candle. Next candle forms bearish, right? But now since it was going bearish, I know some people would take sells right over here because there was a time when this candle was something like this. When a candle is something like this, man, your brain goes in overdrive. You're like, oh man, this is going to go down. We're going to take a sell before the candle even closes, right? And then once the candle closes, you have an entry right down over here, and price has now closed above support. And now you're in a drawdown. You're like, okay, man, you know what? I'm going to keep my stop loss and I'm in a drawdown, but I think it's going to continue down because Raja said, oh, the 30-minute candle, respect that. But Raja also said that it's closing above support. So you need candle to close below support. So look at the next candle goes up, comes down. See what I mean? Now this is basically ranging now. Look at this next candle. This candle also bullish below the support, just ranging. Next candle bearish. You can't take no trades. If you're looking at this in a live market, man, you're looking at every candle moving up, moving down, moving up. You're not waiting for the candle to close. You're taking buys, you're taking sells, you're taking buys and sells, and by the time you're done, you're just like exhausted. And then once you're exhausted right over here, once you're already down 30%, 40%, you've used all your confidence in the losing trades. You've lost all your ego. You've lost all your will to actually look for concrete setups. And then you have a candle closing like this below support, right? So now, don't you think this is a much better confirmation? right? Don't you think that we've actually formed support here with the previous 1, 2, 3, 4, 5 candles, and this candle has now closed below support? I personally think this is a much better confirmation for a trade. If it's not a buy, I mean, it looks really good for a sell because now you have clean candle here looking left, right? So now, if someone was to take a trade, they might say, okay, well, what we talked about was, if you remember what we talked about in the previous slide was about candle breaking out of a consolidation, right? This is the breaking out of a consolidation. So when you look at this, you're like, okay, what's the probability it's going to go down? The probability of it going down is really high because, this candle broke below the previous candles, right? So now if you're going to take a sell over here, maybe your stop is going to be above this candle, right? So let's say what the next candle does. Ooh, see that? If your stop was right okay, let's go back. If your stop was right at this wick, you got stopped out by the spread. And I know a lot of people, you send me charts on my group, that's fine because I can zoom in the charts. When people send me charts on Instagram, man, you can't zoom in on the chart. Sometimes people send me charts, hey bro, what you think about this setup? And I can't even zoom in and I just say, yeah, it looks good because I can't zoom in. So now a lot of times you get stopped out because your stops are right above the candle. You need to have stops above a couple pips of the candle because when price is coming up over here, it has spread as well, and the spread might take you out. But now you're still in the trade. And now when this candle is closed below support, the next candle has a higher probability to continue moving down. Now you see we're making lower highs, lower lows, and the next one comes down to the support. If it comes down to support, we all know at this time we should be taking profits or securing positions. And we have like a rejection here. And that's very normal, we have a rejection. So I think this was a very good example of consolidation here, but you just had to wait, like look at this. It started from, where's my eraser here? It started from right over here, right here, right? Price came up, can't take a buy because stop is going to be too big, plus resistance is right there, can't take a sell either. But if you're a new trader, you'd be like, oh man, no, this is going to go up. Look at the volume in this thing over here. We're going to break resistance. I'm going to take a buy. You take a buy, price comes over here. You're like, okay, we're still bullish. We're going to go up. Price closes bearish. You're still in a buy. You're like, no, this is going to go up. But you don't see. You think at this point, price is going to go up. But what you don't see is that we're creating resistance, right? The difference between thinking what you trade and seeing what you trade. Big difference, man. So the next candle closes bearish and you're in a buy, you're like, oh man, this is going to go down. I'm going to close them. So you close your buys and you take sells. You're like, all right, it's going to go down. And once this candle forms bullish, you're like, oh, god damn, Jesus. I think we're going to go up now at this point. This candle forms, you're 100% sure it's going to go back up now. So you took a buy, you took a loss in the buy, you took a sell, you took a loss in the sell, and now you've taken another buy because you're like, man, this is going to go up. Look at the volume in this thing, but still at resistance. Next candle forms bearish. You're like, boom, man, what the hell? I thought this thing was going to go up, but it came down. Now you've taken a third loss. 3 losses in consolidation. I think the only loss you should have taken was this right here, 1 loss. 1 loss and then waiting for either support to break or resistance to break. But while you're in these trades, you're like, oh man, okay, perfect. Bullish candle, we're going back up, homie. We're going to go back up now. And then bearish, boom, 4th loss. Now you're tired, exhausted. Your account is like, bro, please stop it. Please just end this. But for traders who are waiting, they're waiting for this. They're like, okay, perfect. This looks awesome. We took 1 loss. We waited 2 hours. Now this is our time to shine. You place the stops above the candles, price form, lower highs, lower lows. You're like, okay, perfect trade moving. Price comes down to support. We're going to close our positions because logically, this is a support, and logically, when you have support, price bounces. Price comes down, they take profits. People who are still in sells, they're holding sells. I don't know why, man. They're holding sells. They're like, no, we're going to break support. But once you see price reaching zones, it's most logical to just close it out. And at this point, I think you can still enter, maybe you can enter another one right over here as this candle starts to break the low, or, you can enter right here with keeping the stops up over here. But the most important thing is price action, right? And price then starts to continue moving down. So someone might see this as a rejection to take a buy, and then they got stopped out again. So, this candle, we can't predict this candle moving down. It just happens. It is what it is. Sometimes, price just does what it wants. It's just, it is what it is, man. All right. So this was it. Oh yeah. So this was the last example here. Um, the the things we covered were uptrends, downtrends, identifying uptrends, downtrends. Talked a little bit about fake outs, impulse entries. Talked about like consolidation retests. We talked about consolidation, and we talked about consolidation and then no retests, impulse entries as well. What we're going to do now is I'm going to take like a 5-minute break. I'm going to get some water, come back, and then we're going to start off with a simulation session here. So we're all going to get together and choose like a random date, and then we're going to do our simulation on that.